Hey, Steve, Andy, how's it going today?
Hello, Scott. Aloha, Andy.
Hey Scott. Hey Steve. Hi everybody.
All right, it's another Tuesday. So here we are. These Tuesdays just, man, they go fast. Exponentially, the older you get, too. Um,
That's the way it works.
that's the way it works. Uh, all right, so hello, everybody. Thanks for tuning in. I see the attendees. They slowly trickle in. You guys know the drill. We have a couple of slides we go through here before we get to the real meat of the presentation. So we'll do that. We'll get going with the first one as usual, the disclaimer. Just a reminder, we're a software as a subscription company. We're not financial advisors. None of us are. So just real simple, the lawyers want us to remind you that anything you see or hear, opinions or even some stock ideas or alerts we set, it's not financial advice for you. It's what we're doing ourselves, and you're looking over our shoulder. So in that respect, it's not geared as financial advice. You got to see the right people to sit down and do the financial advice thing. All right, so that out of the way. Myself and Andy have been using Trade Ideas for 15 years now. A couple of the original users, and we've seen a lot of versions come and create new tools and new features. And that being said, there's a pretty rich library of things that you can do with Trade Ideas, and so we try and make it as accessible as possible, because we realize it's not something you're going to learn overnight with just a simple how-to video. There's a lot of ways to learn to drink from the fire hose of data that is our market, and Trade Ideas can help you really narrow down so you're not drinking from the fire hose and focus on what you want. But that's different for everybody, and that's the important part, is finding what works for you. And so in helping people learn the product as quickly as possible, we have first and foremost Barry, the live daily traders room. It's a free room, so there's no reason not to join if you haven't, because it rivals many of the profit-driven subscription models that are live rooms out there. Barry makes his desktop available and accessible and answers questions, especially if you're just kicking the tires trying to figure out if you want this program. It's a great place to start. And then there's a lot of good trading banter going on in there as well, from a handful of good traders that Barry's kind of cultivated over the years. So good day trading styles in there. They're also doing a lot of swing trading. Barry has been definitely focusing on taking the Holly plays of the day and curating the 3 or 4 ones that he really likes, and then traveling, carrying those over to the next day. And of course, he's sharing all this with the room, of course. So if you're missing out on that, by all means, jump in there and don't miss out on that. The office hours we did yesterday, myself and Jamie, we're doing the Tuesday webinar today. Q&A demo tomorrow is usually Dan and Brad, and then Jamie and Andy on Thursday. All of those are aftermarket hours. We have those available as well. Every day is kind of different in content. We try and keep mixing it up. And then Friday is really important. If you haven't been to the Friday support session, from 11 to 2 Eastern, you can come in the same format we're in right now with GoToWebinar and ask questions, and we will demonstrate in real time, kind of like what Barry does, but more focused completely on you guys, not so much the market, more just how to use the product, how to build a scan, work through any ruts you guys might be having. So if you haven't done that, keep that in mind on your calendars. 3 hours. If we go that long, sometimes only 2. It just depends on who shows up and what kind of questions they have, but we make that available as well. And then lastly, the TI University is currently a 4-day course that resets every Monday and gets into the more advanced stuff on Thursday, but we usually hand out the recorded version on Monday, and it seems like a lot of eager people are taking that recorded version on Monday and just kind of running with that, and then they show up the other 3 days for just some kind of basic hey, how do I do this? How do I do that? And so that's the way it's been working lately. But again, just many points of contact that we make available to you guys to help you shorten the learning curve on this great product. So man and machine combined is my theme slide as usual, just a reminder as we go into this technology crazy world. It's not an end-all be-all solution. We still need humans to curate the ideas, and that's what Trade Ideas does, whether you're using your own custom solutions to drink from the fire hose of data, or you're using the AI to narrow down some ideas. That's what we're doing here. We're a combined effort between human and machine, and it should never be construed that any machine is something you can just turn on and turn your back, and then especially in something in fintech like this, think that you can just make automatic deposits into your bank every day. No, it requires a lot of human interaction still. We're going to talk a little bit about some real interesting big picture market stuff today. So market recap, we're at a very precarious place right now, and we still haven't figured out which way we're going to go. So we're going to take a look at the long-term glance and look at some ideas, and a couple of things kind of jumped out at me. Andy and I will look at. The Holly recap was just, just kind of another day in Hollyland, Hollywood. We'll let Andy kind of highlight some of the things that he noticed over there. Trade of the week this week was Jack in the Box. Everybody's probably at least eaten there once. But some thoughts on last week that didn't trigger but did this week, and I wanted to highlight why I think it was important to keep an eye on that one. Kind of like Barry does when Holly sees something, maybe it's a day early. Well, this one might have been a week early. We'll see what happens. I think it's important that since we are at a very interesting precarious pivot point, we could go either way in this crazy market. It'll make more sense when we look at the monthly charts here, but because of where we are, I think it's probably a good time. We did not do it last week, but we'll do it this week. We'll take inventory and look at the sectors and maybe see which ones are looking okay and which ones are looking vulnerable. And then as usual, the alerts that were set last week were kind of a mess, nothing really to write home about, but we were going to set some new alerts, and they're going to be only shorts this week because I didn't see anything to write home about on the long side, but I see a lot of really interesting sweet short setups. And so if the market does cooperate, I don't know, I'm not making a prediction, but we'll get to all that. The point being is the alerts we're going to set today are primarily shorts, and so we will get into that as well. All right, so let me grab my pen and we'll start here with Nike had good earnings after the market, and kind of interesting. There's that green tag is where they are after market, but look at what they were doing going into earnings. It's almost like they were setting up, just waiting for that sideways flagging action, waiting for the confirmation of good news. And so here's the retailers. I know Jeff Mackey will be happy about that. Actually, that's a pretty good breakup there. Jeff Mackey is going to be speaking at our event. And Jeff Mackey will certainly be talking about his position in Nike at all-time highs, I'm thinking here. Interesting. All right, so let's go into our stuff. We'll start at the daily and work backwards. Let's do that. We did not have a good candle today. I didn't like the way we closed. I didn't like the action at all. It certainly didn't like the action. Let's take a peek. Midday. Certainly did not like any of the action here we had today. It felt like we could have really dug in right here on this level. Let's get that to transpose over there, perhaps. What are we going to call this? Like 297. Yesterday it made sense, that low, and then we hiccup off that low today, and all of a sudden, I don't know what happened. Some news reading algo or whatever plunged the market back down into the abyss. Tried to recover, and never really did get a big recovery. We've got a little bit of a wick. The good news is that little wick on the daily candle did bounce, and I like to talk about a target objective achieved. Okay, that's the good news. We did have a nice target objective achieved by bouncing at the 50-day moving average, and that's really the line in the sand that we don't want to see break. We talked about this kind of general area holding up as a higher low. We talked about that a little bit yesterday, and even if we zoom out, it's just cup and handle land. Cup within a handle within a handle, like that movie with the dreams. So that's the good news, but the bad news is I really did not care for that big red candle. We'll see what tomorrow brings. It's the way this market works. There's that line that transposed. Now, it would have been nice to see that line hold. I would have been much more comfortable if this was the low of the day and we bounced off of that, but we didn't. We went a little deeper into that territory. Let's take a look at the NASDAQ. It's not as pretty. NASDAQ has blown through everything. In yesterday's webinar with Jamie, I said the NASDAQ's already done a great job in backing and filling all this mess, holding its 50-day moving average. But today, that is not really what we wanted to see. That's not good. So I'm just talking about this close. You've always hear me talk a lot about, is there a closing candle below the key moving averages? Well, we're starting to get jumbled again. We had this really nice market. I shouldn't say really nice, but we had a market that had some order and semblance to it back here. And then we went into crazy land here with the volatility and the moving averages. And it looked like we were going to kind of hang out and maybe stay above and move higher. But now we seem to be dipping back into the mess, the mess of twisted moving averages. That fast line was really looking good, pointing up, but now the 10 period's starting to roll back over and possibly point down. It is, let's see, Nike, yeah, we'll get back to that, Waleed. We're kind of just getting a technical mess. We're coming back into this technical mess. I'm going to back out 5 days. I would have loved to have seen this resolve, this really nice bottoming candle bouncing off and then moving higher, but we didn't get that. So now all of a sudden we're kind of back in, or what's going to happen here? Well, the NASDAQ, which has been really leading us higher, and we'll take a look at that in a minute, is broken and it's closing. I hate to see closes below key moving averages, especially when we look back here and we can identify this 50 period moving average as a bona fide pivot point. Look at all those touches on the underside. And we came in this day right here was our, there we go, our testing day. Now that pivot point was a support. Well, now we've given that all back and we're back into the mess here again. And I don't like being in the mess. It just makes it harder to make decisions and easier to get spooked out of things. So let's do this. Let's go back to the S&P and let's just pull a way out. Let's just look at the big picture. This is why I say we're a very precarious spot here. It's been a nice run since QE started in 2009. We've had a couple of periods of volatility, but for whatever reason, the market finds its footing and moves higher. But one of the things I've noticed, I'm going to pull this line out of there. We don't want to transpose. One of the things I've noticed in the last few monthly candles here are these little spiky spikes, these little spiky wicks. They don't like being up here. Just like these spiky spike wicks to the downside didn't like being down there, or this one right here didn't like. So, and back here I might add, so when these candles show topping tails or bottoming tails in the monthly time frame, kind of pay attention. So that's kind of interesting. We can't really get out of our own way here in the bigger picture of the monthly, and maybe we need another reset. Maybe we need another shower, to come back down into the line of the trend line again. I don't know, but there's a lot of buffeting going on here. When a plane begins to stall and fall out of the air, it shakes as it's losing its lift, and then it stalls. NASDAQ, the Qs, same thing. You want to get hung up on wicks. If you're going to look at, and we are almost at the end of the month here. We got another week to go. If we can't get out of our way here, we're going to have these kind of three spiky wicks up here to contend with. Keep drawing over the. Here we go. Same thing back here. These bottoming tails showed a buoyancy of buyers. Well, now we're starting to get the uncertainty of some of these topping tails, and it could be the beginning of some uncertainty. Again, it's been a nice ride. You don't really look back in the history of our markets and see bull markets this intact this long, do you, Andy?
No, you don't.
No, you don't.
No,
they don't. So those are a lot of rambling by me. Anything you want to add here in the bigger picture?
No, I'm glad you pointed that out. It goes back to what I've been saying now for months. It's just like this market. Every time it gets to all-time highs, there's no enthusiasm. It's met with more selling, and that's why I believe it's just one of those kind of markets. Instead of buying the breakout all-time highs, it's a time to be selling as of late, and that theme continues. And I agree with Steve. It's just something you think something will have to give here soon. That last dip we had, the two big red bars there on the monthly, you think that may have been enough, but maybe not. We'll see. Maybe we need to dive down to that 200 on the monthly or something. Well, I guess that'd be equal to.
Something kind of not very pretty. This IWM in the bigger picture, we've been talking about it's lagging for months, and that's not a really, that's kind of a bearish chart in my opinion. Very stubborn head and shoulders chart. And this is just not looking good. So it was trying last week, and there was a little bit, and there's our little try, that the top of that green candle, it poked its head up there into, hey guys, what's going on? And they just beat it right back down. So kind of lost the idea for that. Let's look at the Dow real quick. Same thing in the Dow, some spikiness. So it's almost like you get up here above 12,500 feet and you lose your oxygen. You start to get a little tipsy and you got to come back down and get your oxygen. The market just isn't liking it up here. I don't know what the catalyst to be to propel us this much higher. We're cutting interest rates slowly. I hate to get into all that stuff, we're price guys. We don't like to really try and think about the big picture stuff. But speaking of big picture stuff, there's a lot of defensiveness still in the gold markets. Definitely that's the story there, breaking out of a multi-year range in gold. Silver has been playing catch up as well, and you can see it's literally still playing catch up. It hasn't really done what gold has done. I think if silver were to catch up, you know, eyeballing it with where gold is right now, silver should be probably up here, you know, because that's the long range that silver's been in for a while. And we'll go back to gold, and you can see kind of what I'm saying there. I mean, so there seems to be a real luster. And let's go back to the daily, because it was really interesting coming out of the weekend. Silver on the daily had a beautiful pro gap. This sell, intermediate trend down, and then reversal, big pro gap. Tested it, held it again today. Whereas on the daily, gold's like, yeah, we'll just kind of creep higher. But silver's like, you know, let me out of the gate here. I got to go. So still a lot left in silver, I think. We'll probably get ahead of ourselves a little bit on the sector analysis, which we will get into. So that is a little bit more of a long version of where we are, because we'll just leave you guys with this. As I ask the question, is this a double top or is this a higher low? That's where we are. That's literally where we are. And let me just add, if this is a double top and this fails, that's going to come so quick before you even know what happened.
Yep.
Because everybody's going to run for the gates at one time. And that's going to be a big event if it happens. So that's what I'm thinking. Now, Andy said a good point. He's having a hard time watching stocks breaking out from the A table. They're just not following through. We'll get into that a little bit. It's probably why I'm not seeing a lot of things that I want to talk about at the end of the segment today when we set some alerts. They're pretty much going to be fade shorts, beautiful stocks that have bounced right up into very, matter of fact, I don't even have my list yet, Andy. We're going to go through the two scans that I'm going to flip. We're going to go through them together and just find.
Oh, yeah, like. That's always fun.
That's always fun, yeah. So that's it for the market segment. I'll pass it over to you, and we can move on to what happened in the AI land today.
All right, let me grab it real quick. Can you see?
Yep.
All right. Well, let's first of all, like we always do, let's take a look at what Holly had to work with today. And some interesting thoughts from me today, because I was watching. What happened is yesterday, I set my long swing algo in paper trading mode and set it here yesterday, and noticed yesterday had some nice green on there. Had a few reds. It wasn't anything, you know, rip roaring like it was the last time over here. And then this morning we gapped up and started moving higher barely here in the market for the first 30 minutes. And I'm noticing all of my longs, even though they did not gap, and they were all turning red. It's just like, gosh, it's weird. And then I look at my compare count, and it was that even though the market gapped and was moving higher and trying to in the first 30 minutes, this was still showing me 55%, you know, to the downside. More stocks hitting new lows than hitting new highs. And I was telling the guys, I'm like, gosh, I feel like we're going to go lower here. So what I ended up doing was basically bailing out of all my longs and turning on the short strategy. And so what I lost on the longs, I made up, and then some on the short strategies. But anyway, I bring that up because a lot of times, guys, I wanted to point this out. If you're watching Holly, and you're watching your compare count, and you're watching market, maybe you're seeing stocks, you know, as the market, if you like to saw a lot of the internets today, you know, Facebook, market gapped up, was immediately selling off. A lot of them are doing. He just showed you the cues, and I noticed a lot of semis doing it. I'm like, whoa, there's some selling going on out here. That's the kind of thing, you know. This is why we always say man and machine. Okay, so when Holly comes out in the morning and fires off, you know, a couple of longs, along with one short. I'll get to this in a minute. You know, maybe you ought to step back. You know, I'm like I said, I'm not trying to defend Holly. Holly's had a great week. I mean, she has been doing incredible the last week. Today was very tough market. Getting back to the spiders, we had a gap up, probably threw a lot of the strategies off. You can see she came to play with a lot of strategies this morning. We had a small gap up, nothing big. And then, you know, once again, if it's me and I'm looking at this action, we're below the fast line here coming up. You can see we tagged it perfect there in the daily on the spiders. Qs were selling off. You might want to be careful. You might want to be careful getting excited too excited about longs. Now, with that being said, Holly did have kind of an even distribution of long and shorts today. I think probably most of the longs would have been probably in the first hour and a half when the market was still up on the day. And then she started, you know, to fire more shorts. She definitely had more long strategies, you know, coming into the day than she did short strategies. So naturally, with more strategies, you would think there'd be more longs, but it's about an even distribution. And if I sort by risk off, we're going to see here, this one strategy on risk off was a long that worked, but boy, you had to get out quick. Here was the buy signal. You had about, maybe 30 minutes, you know, and Hollywood was quick to get out on a timed exit right here. And boy, if you stayed in this one too long, it came right back, you know, down. You can see to the entry there. But then this one right here, a really good short. Okay, this is an hour after the market's been open, about an hour and 3. This is something that would attract my attention. Okay, I'm watching the market, I'm watching the compare count, and you know, I may tell myself, okay, I'm going to keep an eye on Holly shorts. And you can see here, the next 3 did pretty good in risk off. Well, this one right here didn't work too well in risk on mode, but this one worked really good. This PHR in risk on mode. That's by far the best trade of the day. You had a perfect little sell signal right here, and no pain really whatsoever, and pretty much kind of bled down. And risk off, she made about $100, but almost $500 when you're using my calculation. Not sure what it would be over here. This had to be the one in Holly Grail, because you can see risk on, she performed best. This is based on putting 100 shares on every stock. So nothing to write home about today, you know, but that being said, we were commenting yesterday, lot of good trades, Holly's been doing really, really well lately. And I think you just have to be careful with Holly when we get back in these funky ranges, okay? And let's admit, it's been funky for quite a while now. And that's interesting. If we do get back up here, we could be looking at it upside down head and shoulders. But like Steve said, who's going to win, the upside down head and shoulders or the double top there, the spiders? But anyway, guys, let's see a couple of more here. This GII downward momentum, it lasted a little bit, but pretty sloppy there. You had to take it quick. Not really. It kind of hung out down here for about an hour, give you time to get out. But no follow through on that one, and really no follow through on this one either. It pretty much closed, you know, right where Holly got out for a small winner. But after all said and done, you can see here Holly did perform. She performed, I guarantee you, better than most traders today, because I know how traders think, and probably a lot of people were trying to buy the bottom in this market, and it was ugly. It was kind of an ugly tape if you were bullish today. No real bounce. Tried to bounce right here, but nothing really, like I said, to write home about. But Steve, that's about it. Not a whole lot to go over today. Holly held her own, and with an equal amount of longs and shorts.
Okay.
All right. I'll pass it back to you.
All right, you caught me looking at a penny stock.
Oh, were you?
Yeah.
Oh, I look at Chinese stocks all the time. Huh?
Yeah, I didn't say it was Chinese. I just said it was a penny stock.
Oh, I thought you said Chinese stock. Okay.
Not penny stock. All right, so the segment is now the trade of the week, which this week, you know, just I couldn't pass up this really good looking chart. I mean, again, assuming in the body of the email that went out, we always have to predicate our decisions off what is the market doing first. Well, in that respect, this little guy held up pretty well today after triggering yesterday. It's a little bit higher today, and geez, when you talk about relative strength, relatively speaking, it did not follow the rest of the market. That's the good news. The bad news is if it does decide to break, this is one of those deals like I kind of mentioned earlier. The way if these fall, they fall hard because you have all these rejections. So what I want to say about Jack is keep Jack in the box on a real hair trigger. Let's even look at this in a different perspective here. All right, I'm going to go ahead and kind of just really zoom out on these 15-minute charts. I really would not want to see at this point the way this market's behaving. I really would not want to see this thing break back below and line back up on a daily chart. And there it is. There's the 10-day moving average. So even though I believe the email said use the 20-day moving average, which is bringing up the rear here, we've got two more days under our belt since we first looked at this trade, which looked kind of like that going into the weekend, and we've got 2 more days now. I'd like to say, I think I'd like to make an adjustment. If this trade, in other words, in the interest of keeping risk reward and our risk tight, I would use the 10-period moving average to not let it close below. So let me erase this line again. And again, we can see we've tested that line 1, 2, 3, 4, 5, 6 times, including yesterday, but none of those times has closed below the 10-period. So that is the downside target bogey, the downside alarm bell, if you will. There's nothing to say that this thing can't find some goofy news overnight and gap up and run tomorrow. So if you're in it, it still looks okay, but don't give this a very long leash. Keep this thing on a real tight leash. And then, of course, we always have to keep one eye on the market. If this S&P starts bleeding back down below today's low, which is the 50-day moving average in tomorrow's trading session, be very wary of any longs you're in regardless. Just want to throw that out there. So also, Shack is on that same list here, Shake Shack. And Shake Shack gave a little bit back today. And the reason I bring that up as well, I mean, they're kind of similar. Food maker, Jack in the Box, and Shake Shack. They pretty much both sell the same widgets. So you can keep one eye on what's going on over there in Shake Shack. But, relatively speaking, Jack is holding up okay. Now, the only thing I didn't like about it is both today and yesterday, the relative volumes were like 0.6, 0.7 today. Relative volume just wasn't there. And I want to use this to segue because it's really important. Until last week, remember our trade of the week last week was FND. Let me zoom back a little bit. And we went all week and this sucker didn't trigger. But what it also didn't do was violate the 20-day moving average, which was bringing up the rear in this case. But here is where it got really interesting. Yes, last Friday was quadruple witching, so we expect big volumes. But Monday, boy, there was some serious follow-through volume. And then today, of course, volume. So volume doesn't lie. This thing was doing like, 10, 12, 15 times relative volume today as it started off the day anyway. Let me go back to yesterday. And the stock opened right here and it was doing like 30 or 40 times relative volume, and then it just exploded through the tight little range that it had been in. So sometimes the tighter the range, the more explosive volume we get. Now, this, unlike Jack in the Box, which we were just looking at, it's been holding incredible amounts of volume, relative volume, I should say. So always pay attention. Don't forget to pay attention to what's going on down here. This was really interesting. The more of that you see, the more confidence you can have to be in a trade. Now, I did participate in this trade. Andy saw it, but guess what? I got out when it broke my rule, when it broke the 10-period moving average during the middle of the day. And at the same time, what was the S&P doing about that time of day? It was down here. And so I was like, you know what? I'm not going to have any of that. It was a fun little move, anticipated, and it worked, but out. I'm always watching the backdrop of the market to see what's going on over there to help with the bigger picture. So the lesson is here, it's kind of like Barry and what he's doing with Holly. He's keeping an eye and watching for a few days after just to see if we can still keep something on the radar. And the fact that this thing never broke its 20-day and the pinched sideways tight range was just, and the volume building up, this was just a percolating scenario here. Imprint on that nice tight range with volume percolating on a trend, resting on the moving averages. That's what you want to see. And so for those of you out there that maybe didn't take your eye off of FND last week, even though it didn't trigger, it's a good example, a teachable moment on how they still can stay in play if they don't fall apart in the first week. So kind of a double hat tip on this week of the trade of the week. Just wanted to follow up on that. I think it's a good point now. We've discussed where we are at a precarious point in the general market. Are we at a double top, or are we ready for another correction? So with that, why don't we maybe take some inventory on the sectors here. We'll just go down the line, and I'm just going to zoom out a little bit and kind of see if anything is catching my eye. Now, right off the bat, this is gold miners, and I'm going to let gold really predicate what the gold miners do. And we looked at gold earlier, so just going to leave that as is. There's the other gold miners. Here's the treasuries. Treasury market had a pretty good pullback. Maybe it looked like we were going to break out higher, but in the last few days, people are buying treasuries again. Okay, here's our gold. That's a pretty sweet looking setup. I mean, that moving average, that rising low was a really nice base that was built, very solid base, and it was repelled higher by the rising 50-day moving average, which is a really good intermediate long-term trend indicator. Is it above the 50-day moving average, or is it below it? It's the 50-day average. Is it sloping up, or is it flat, or is it sloping down? It's always a good way to look at those. So gold is still looking good. We know that. Home builders, yeah, you know what? Not too bad actually. They're kind of resting here. This is not too bad. Home builders are still in play, I think, and I'm saying that because they broke above that pivot level, and they've returned to the scene of the crime, and they seem to be holding that pivot level for now. If things stay strong in the general market, home builders could hang in there because they're showing signs that they haven't technically broken down over there. Silver, we know, is extremely strong. Call that a pro gap. Actually, it's not a pro gap because the trend was really up for the most part. It was just a few days down, but it was a trend gap, just like we had back here. Looked at the Dow, we looked at that. Airlines, just, wow, that's a mess. Look at that. Unless you're just really good at wanting to sit back and trust that range back and forth. There's nothing really sexy about that.
Channelingstocks.com.
Channelingstocks.com. How easy is it, right? That commercial. There's our S&P. All right, retail. We're going to get, Jeff Mackey talking about retail in general, but well, it's been in a downtrend, and it's fighting this 200-day moving average really hard. It's kind of a mess here. So retail seems to be more of a name-by-name basis right now. Target, Walmart, Nike, the big guys. Oops, Nike, the big guys that just reported today. So retail is probably a case-by-case basis. Here's healthcare. That's a mess. That's news-driven. Technology, that's going to look just like our QQQ ETF. Financials should be interesting. They got a good head start off their lows, and they've pulled back a little bit. So the financials are still above their key moving averages. They're going to have to really hold this level here. We'll see what happens over there. Now IYR, this was really strong earlier, and they've been trending higher and higher. Kind of like home builders, the IYR, the REITs. They're hanging in there for the most part. Pretty big pivot level that I see for the most part right there. A lot of wicks to the downside, and then seems to be supporting. So that's relatively strong. This is agriculture, not really much to do there. FXI is some China. For the most part, they're not real happy with, I think, the trade news. Now we're getting into regional banks, similar to what the financials look like. I see a very solid wall here, 200-day moving average, 20-day moving average, and the 50-day. So the banks, which is a really key sector, they're going to have to hold that to that level right there, in my opinion. Otherwise, the market's not going to like that. There's natural gas, another bank right there. NASDAQ we looked at. Okay, the semis are a good focus, are a good function of the NASDAQ, and they're holding up pretty well. They're still above, for the most part, their key moving averages. So within the NASDAQ Qs, semiconductors seem to be a pretty good sector holding up that tent over there. Here's the broker dealers. This is your Schwab's, Ameritrades, E-Trades, Interactive Brokers. Well, interesting. All I really see is a gap being filled there, but for an ETF of an index, that could be okay, I guess. So far, IYR and home builders really the only thing I've seen strong, and financials are trying to hang in there. Software looks ugly. Look at that. That's not pretty at all. And here's an example. We might see a couple when we do some short setups. Moving average is starting to roll over, and in the process of rolling over, it's exposing all these days that it just couldn't get above. That's a very bearish looking chart, and that again is the software index.
It was interesting that broker dealer looked pretty much identical to like the SPYs.
Look at that too.
Uh-huh.
Software's not looking good. So yeah, broker dealer and the SPYs. Let's see, so we can look at that. There's your broker dealer. There's Spider. Yep, you're right about that.
Yep.
At least. Yep. All right, so software. Ugh, not looking good in software if you're thinking waiting for a miracle over there. Energy. All I see is this downward 200-day moving average. It tried to get above it, but until it does, it's probably not going to stay in the basement. We looked at the IWM, gave a lot of it back today. In the bigger picture, it looked horrible on that monthly, but kind of like we talked about everything else, it needs to hold these two key levels right there. If it doesn't, then the IWM is back under suspicion.
What a mess that thing is.
It is. People just don't know what to do with small cap stocks right now. They're buying the big ones. This is also a mess, the biotech land. I don't really see, I don't even really see a bigger fundamental picture for the biotechs, to be honest with you. It just seems like the drum beat to drive these prices down is just everybody wants it. Oil, big explosion after some macro news last week, but pull back here into the gap. And then steel, still in an ugly trend. 200-day moving average is not happy. So until the 200-day moving average is breached, steel is under pressure. There's more China stocks, I believe, right? No, yeah, China, K-Web. Bad day today. Well, okay, well, this is interesting. Solar has been just creeping higher. Matter of fact, it was pretty darn high, not at all-time highs, but pretty darn high just a couple days ago. So solar is hanging in there. So interestingly, home builders and solar, and well, we can go back to FND. That's home building, this home and floor decor. People are still putting money into their homes apparently, and people are still paying money for homes, and people are still investing in REITs was the last one, IYR. And then SWX, the software ETF, just isn't looking good at all. XSW, I meant to say. OIHs looked like they were going to have a move. We talked about that a few weeks ago. They were basing down here. They couldn't go any lower, and without being able to go any lower, they popped higher, but they couldn't make a higher high on the downtrend, so they're back to being suspect again. And that is a trip through sector land. The home builders, the REITs, they're the ones that are staying kind of interesting. And also, the XLF, if they can hold these levels here, the XLF, they can maybe make a cup and handle type of an assault. But it's going to just really depend on what's happening in the S&P. And again, back to my original thoughts, the Qs are the most suspect of all, only because their price action is sneaking and closing down below these key moving averages. And trust me, quant funds are looking at closing prices in relation to moving averages and touch points and waypoints. We have a question here. Is the sector ETF screen a filter? Yeah, it's a two-part deal here, guys. What I'll do is, I'll drop the shell of the program. This is the shell, but it involves what's called a symbol list. And so,
Steve?
Yeah.
I just dropped the channel bar description. Oh wait, I don't need that. I need to drop another one in there. I'm sorry. I'll drop it in there that has the list on it.
The list. Okay, so there's the cloud link for the actual shell that you can use to encapsulate all these, and then Andy's going to have the list of these 32 ETFs. But essentially, all you have to do is go to the symbol list here in our tools section and create yourself a new list. I'm using what's called ETF, and there's the list right there. And then once you've created this list in our library and named it and saved it, then you just point this scan towards it by going to configure and a symbol list, and I'm pointing it towards my ETF list right there. You got to kind of connect the dots.
I dropped in the handouts. I dropped a document called Channel 4 document page, and it will have that. You can get the window, the top list window from Channel 4 in our channel bar. And then you can go to that document page, and we'll have at the very bottom of the document page, we'll have the ETFs all listed for you. So all you have to do is copy and paste.
All right, so we're going to move on to our final segment here. We're going to look through a couple of scans in real time and see if anything catches our eye. Actually, let me back up here a second. So what I'm doing is I'm not looking for long scans For those that don't realize, there's something called the flip button, which makes things about as simple as can be in terms of taking a strategy and flipping it upside down. And believe me, it is that simple sometimes. That's why they say buy the dips if we're going up. And if we're in a down market, they say sell the rips. You're going to get a much better entry, letting the buyers peter out and run out of steam. So with two scans here, this first one is buying pullbacks to the 50. Here's a stock that pulled back to the 50. Well, there's a ton of them on here, but I don't know if I like any of these right now. I'm a little bit more interested in another idea, and that is to take this scan and to go into configure and hit the flip button. And we're going to see what the flip stocks look like. These are the ones I'm interested in now. And as we go down, these are all going to be short selling ideas. I'm going to kind of look for areas that have stalled out, maybe downtrends, of course, downtrend. But let's just see if we can find something. I want to go through here, not too quickly, but if something catches my eye, we'll stop and talk about it. I want to zoom out just a little bit more for perspective. I know this next one's going to be good. I remember this one. Look at our friend, the 50-day moving average. Big drop here, something happened, and wouldn't you know it, this guy just can't seem to get back above its 50-day moving average. There, and today. So these are the kind of things I find interesting, and so this is the first short setup. I'm going to look at the intraday here, and I'm going to use this level down here. Open this up a little bit more. All right. So I think if this level fails roughly right here, we could be seeing some lower prices. And again, I just like the way it's been failing at that 50. And if it runs out of steam and gives up, it could be another drop. So failed at 50 SMA. That's why I like this one. Short. Set up to go short. All right. Let's continue on our way here. CERN. These look like they're alphabetical. They're in no real order. Yeah. And sometimes just the price action on the daily chart speaks to me. Like, yeah, stay away. This is bouncing, but it's not really at any kind of critical level that I see. I'm going to pass on that. I wish that was right at the 50. That would be interesting. Actually, that's a pivot point. What kind of volume? So here's the next step. What is this? What does this do? This is real estate. Okay, well, shoot. We know that's a strong. It's doing decent volume. Earnings are not coming up. What does it do in real estate? Activities, rental and leasing. I don't know. I'm a little scared of that sector, so I'm going to pass on that one. Remember, we started from the top down. We looked at our sectors earlier. We kind of know what's going on. I'd like to see levels that make sense. Kind of running out of names here too. But I think you're going to like the next one, Andy. This one's interesting. Yes. We're going to do the old go pause go. If it fails, we have our go, and then we have the narrow range. When the narrow range fails and it takes out that low, it can be a short. We're going to go ahead and do that just because. Here, we'll just mark that up. What I'm going to do on the next one, when we get to it, maybe you've already seen my desktop. Oh, that doesn't look bad. What is this? Yeah, I'm going to stay away from that. All right, so I'm putting this one aside, and what I'm doing now is I took Andy's bull flag, the stuff we're looking at on the dailies for nice bull flag like this, not bad. Maybe we should even mark that up for a long. But I think we will, actually.
Yeah.
I think we will. Can't pass up a really good bull flag. That one will be coded long. All right, but what we're going to do is we're going to look for this kind of setup on the downside to see if we can find some push through to the downside. Suncor Energy, that's interesting. That's not a bad looking long either. We'll mark this one up and then we'll move on to the next. There we go. All right, so what we're going to do is we're going to flip it. we're going to look for these same setups that might be pushing stocks to the downside. So we go in, we click flip, we say okay, and now we've got a bunch of new names we can look at. Some of these things look like they might want to go lower. Starbucks is actually one of them. Believe it or not. It's been banging on this. Remember that old game, you Generation Xers? You'd bang on that little plastic ice, try and find the weak spot in the ice. Well, that's what I see these kind of charts doing. So we're just going to, I don't mind all the times it's banged on this thing to make this a follow-through alert. This is okay. I'm okay with that. It's tested it so many times that if it tests it again and fails, it's probably going to take this range out and then some. So we'll go, what's the low over here? 30 cents, and the low over here is 38. So we'll go to 29 cents. 28. All right, that's going to be a short. I know there was another one on here I really liked, but again, it was close to the market closing. No, it's not. I don't. Let me see. I'll tell you why I don't like this chart. Look at all this stuff back here. That's a personality to me. It's giving me the chart personality. I'm not interested. Well, I got to say, Andy, when I pulled up this content about an hour before the market closed, there was a couple more that were interesting, but they're no longer on this list. And so,
they probably dropped down or something.
My idea.
You can always go back in time if you want to.
Let's do that. Let's go back. Thank you for reminding me of that. Historical data today at 11:50 a.m. Did we have anything interesting in here? I remember Starbucks. I think it was, no, it's not race because I didn't like that. I'll go try one more time and see if there was something more that I was missing. Maybe they could have been on the other one as well. It was definitely Starbucks. It might have been this one too, but I don't think.
That's not bad.
Yeah, it's not bad. The only thing I don't like is that stupid reversal wick right there.
Yeah.
Well, we're not in the interest. We're not in the business of forcing things, so we're just going to leave it at that. I'm just going to. I thought I might have had a few more. We were going to do it in real time, so I didn't really know what we were going to get. But sometimes the value in that is kind of seeing, checking off why you might like a chart versus another chart, whether it's that personality I showed you, or whether it was a sector, a real estate sector that I know was strong. I don't really want to go against that. A couple questions here before we bring Scott in. My brother's head took a beating with that little hammer. Seems like a big problem. Short.
I think he was talking about that game you referenced.
Oh yeah, it's funny. You beat each other up with that hammer. It was a plastic hammer. It shouldn't have hurt that bad. Or maybe it had a little weight to it. I can't remember. We're a little pickaxe. Anthony says setups that are triggered by hitting a low and yet you can't buy on a downtick. No, that's not true anymore, Anthony. That's an old rule, the old uptick rule. You can hammer away at the bids now, which is really nice because it's at least something we can do to try and offset the advantage that some of the algos have, because they can do it. So they might as well let us do it. I think that's what it really ultimately came down to. Enough people said, these quant funds are doing this crazy stuff and they're getting short on extra arbitrage markets. Just open it up and let everybody do it. And that's kind of how it went down. Not often, but okay, so what you're running into, Anthony, is if the stock is shortable or not. The brokers you trade through, they have to account for the stock you're going short into the market, borrowing it against their inventory. So if they don't have it to loan to you or to loan to somebody else, they'll deny the trade and say you can't take the trade. But there shouldn't be an uptick rule these days. Yeah. All right, well, that's all the content we do have for today. So I'll go ahead and we'll bring Scott in for some announcements, and we'll see you guys. I forgot to, hang on one second. I forgot to share the alerts, didn't I, Andy? Thank you. Let's do that real quick. Share those price alerts out. Only the ones that I created today, the 24th. Not Roku. We're not including that one. Okay. Share 5 selected alerts. Not a great list, not a big list, not a lot of conviction this week, but something at least to put on your screen and keep an eye on as things transgress. All right, let's try again. Scott, we're ready for you.
Thanks, Steve. Sounds good. Couple things. There's a summit. We have a great one coming up in October, late October. Go ahead and go to trade-ideas.com/summit to check out the lineup as it is right now. We're adding some features as we go along. Use that code that's on your screen to get discounts for tickets if you can make it to San Diego. There's also hotel room discounts detailed on that slide as well, on that landing page. If you can't make it in person and want to watch online, just go to trade-ideas.com/livestream and get the details on how to tune in on the day of the event or watch the replay. But if you can make it to San Diego, we'd love to see you there. It was a great event last year and the year prior to that. This is the 3rd annual, so come and join us if you can. Ticket discounts are available, and as I mentioned, hotel room discounts are still available as well. That won't last long, though. Let's see what's next. We have a series of ebooks out. They're relatively new. If you don't have them yet, go ahead and go to trade-ideas.com/setup. Put in your email address to get the download links. Both Steve and Andy contributed chapters to these ebooks, so you should check them out. Again, there's 3 volumes. Each has 2 chapters. They're organized by topic. Don't miss out. We've got a podcast. We put up new episodes weekly. We just started the fall season after summer is over. So go ahead and search for Trade Ideas Podcast wherever you listen to your podcast. Add us as a subscription. Check out the back issues, the archives, and then you get the new one on Friday. We have a code that's good this month. Save on Ideas, all caps, just like you see it on your screen. It takes 15% off your first month or year of Trade Ideas, or 15% off your Brokerage Plus subscription. Or you can use it to upgrade from standard to premium and save 15% on the upgrade. It's a great deal. Go ahead and check that out before the end of the month when that code expires. If you have any questions, hit us up on info@trade-ideas.com. That email address goes directly into our help desk software. Gets routed to the appropriate team member to help you out. Steve Gomez is @TodayTrader on Twitter. We've got @TradeIdeas, @QuantBot, some other handles. Go ahead and follow one. You'll get all of them coming through your stream. Trade Ideas Pro is the Facebook handle to follow and share with your friends. We're going to have this recording up later on tonight or tomorrow, so stay tuned for that. We'll send you an email from GoToWebinar with the link. Thanks, everyone. Thanks, Steve. Thanks, Andy.
See you next time.
Thanks, everybody. I'll see you Thursday.
Bye-bye.